We will present our project named Breath In. The members are Rafael Méndez and Ricardo Nájera for the subject of investment projects, and hope you enjoy it.
Well, the description is simple. It's only create a bread to help the people to reduce calories and reduce disease. This bread have different ingredients about the different types of seed flours. For example, chia, oat, whatever that, and that to elaborate this bread. Next.
Well, the current situation is the lack of marketing plan, low demand, concentration, and seasonal. Well, we can grab some products, a few products, healthy products in the supermarket. So our objective is to enter in the market with new products for the people to eat healthy.
About the description of this project, we have the features assets is the truck of the transport, the bread factory, machines, the ovens, the warehouse of that, etc. They have the reverse assets is healthy seeds, flours, powers to make the final product. We use the milk, plastic bag, accounts or receivable, and the cash. Next ones, you need to use the permit or the license. We could be to export to other countries to produce the product, certification of the clients. We have to have a permit about the patent of the product, and that's it. Of the object is repeat, develop a new piece of bread to product to people looking to reduce calories, and that's it.
So we in the market research we compare it to bread you can get in the market. The company, the famous company named Bimbo. Here we can see the proteins that a Bimbo bread uh, contains and our bread contains. So at conclusion of this graphic, with our bread we plan to give you more proteins in less sugar, fats, and calories.
Then one is Mexico has a several problems to eat a lot of calories because you can see Mexico has a 17% of overweight. Other is the obesity is the 23. Only 20% is people eat healthy food. So Mexico is only is of the countries that has a lot of fat products. So the idea is to reduce that percent.
Well, we made a market research. We made a quiz of 100 people that what do they prefer, and most of the people do not consume healthy bread, and this is because they don't have. Well, they have a few options in the market to wrap healthy bread, and even it's so expensive. So that's it's like why the people don't eat healthy.
Then the benefits of the investment project is the repeat the reduce calories, reduce disease. The other one is the healthy market is bigger, so we have a good opportunity for this project. The next one is the people are arranged to pay of healthy people. The other is the don't have too much competition. And the final is you can create a new products of different ingredients.
Well, we will start with the project structure. Here we have the three type of product we are planning to enter in the market: the conchas, chia bread, and out bread. Here we have the projection of the sale units for each type of bread, the prices, the growth rate for units, cost prices, the raw material, the manufacturing labor, the variable cost, the net investment that later we will see. We plan uh, the life of this project will be of 6 years, and the tax rate according to the law that you have to pay 30% the net working capital, that later we will see it with more details. Well, the unit price determination, we used a method named absorption method for all the type of, well, all the bread has the one price. This is for us easier to make all the calculations, and even to the market to get any bread at the same price. So um, for this to not generate a competition with our own bread.
About the revenues, we're talking about 6 years. We consider these three products. We put the units we can sales is the 100,000 about these years. We put the price is the same of the three products. That is the 10.10. And then we make a equity cost for every bet. And then we put the growth rate is the 11%. And the price is the 40.59%. Then
Okay, as we can see here, as I said, we have a growth of 11% here. Here you can saw it in year one. The price was, well, will be 10.10, and at the end of the project will be at 12.64. And well, here you can see the revenues is a good revenues according to the net investment. So we will continue with the cost determination. For the cost determination, we take a growth rate cost of 4.66% according to the inflation of the country, and the growth for the units that we take 11% according to a market research. Um, well, we have here the total fixed cost, the variable cost, the variable out breadth, well, all the with the conchas, chias, and note. And finally, here, as you can see, is we have no too low cost, but according to the revenues, it's a good thing.
about the sales unit determination, our plan is to sales is to do a market analysis. We work and understand our markets. Is also identify the competitions. We talking to put the three different products, put 100,000 pies during per year. Will be distributed of different countries, and then we can see the growth rate per year is the 11%.
Okay, and the required investment here we have that 200,000 for the starter machines, 500,000 for ovens, 300,000 for the trucks, and 25,000 for work tools, and finally 70,000 for the special desk. Here we have a total of 1,473,300 for the net investment. So well, the cost of capital, we have some partners who will invest in the project. We will ask to our shareholders and to our and investors to invest in this project, and the capital structure. We will ask for 500,000 of the partners for buying the first assets, and we will take 1 million of our own capital, and even we plan to take a credit of some banks. We will search the best rate for us. So in the depreciation, we have the 6 year, and for each asset machine, the steering machines, the ovens, the trucks, and the desk. And well, at the end of the project, we are planning to sell some assets to get a salvage value. And here you can see that all during the depreciation. And well, the tax rate according to the law is 30% of ISR, 3.68 of YEPs, because our product contain a lot of fats, calories, and sugar, and the salvage value we plan to sell two of our assets, the trucks and the ovens that later you will see in the cash flow. Please, Richie.
Then we put the network capital investment. So about the seizures, we have positive, good opportunity to this project is the network capital about talking the 10% to the sales, to have a good increment of the sales of the units. So we have a good answer of the with the products.
Okay, thank you, Richie. The net cash flow calculation, here we have the change in revenues. Is growing all the years because of the 11% we told you. The change in the position of the assets. And here we have the non-operative profit before taxes that, as you can see, it increased so fast. Then the change in taxes that it is the 3% and the 3.68% of IEPS. Then we have the non-operative profit after taxes. Then the change in depreciation, the net working capital, and the net cash flow. As you can see, is always positive. That is a good thing of a project. And finally, in the year 6, well, is the end of the project, and we have the recovery of net working capital, the income from the sale of the assets, the salvage value, and tax effect from the sale of the assets, the tax shields, and the terminal net cash flow is well, it's planned to be 4,517,643.81. And here you can see the book value of the sewing machines, the desk, ovens, and the total.
Then we determine the wage average cost of capital of the capital structure is, you can repeat the capital structure put 33% and 33%, and this about the Canada, about the Canada is about the credit of the banks. We put 20.75%, about half 14.53%, and then about the equity is 67%, and then we use you can see about the inflations, RP, KD, and we can have is 75.75%, and then we can to calculate the WACC, who is 22.5%. And that's it.
As my friend told, it's a 75%. We took that like as an average of the rates of the banks. So we will continue with the financial evaluation. Here you can see the year 0, that is the net investment. Then we can see all the cash flow according to the revenues. The payback plan is 2 years. As you can see, in the year 2, we have a positive cash flow. So this is too short for a project to get positive. And then the discount payback that use this rate of weighted average cost of capital. Then the golden rule, the net present value that shows you the value of your money today, and even is so good of 4.4 million. The internal rate of return is about 62%. The modified internal rate of return is 87%, and the profitability index is 6 cents. So this is 2 good numbers. Here you can see that for each peso you invest, you will get back 4 pesos. So this is good numbers. the financial risk. Here we can see the scenario. The base cases is well, here the probabilities. The standard, the coefficient of variation is 59%, so that represents is a low risk, and the C is minus 1.69%, so that is too low risk, so this is a good project. And the probability of having negative and the probability of having positive net present value, so this is good numbers. The sensitive analysis, we can see that units is more sensitive to a change. The price is middle sensitive, and the variable cost is low sensitive. Well, for the conclusions, we saw that it's a good project with good numbers. For the payback, it will take only 2 years, and well, it's a short period to get your investment back. For the profitability index, you will get back 4 pesos for 1 peso you invest. So it's a good rate. It's a low risk. So comparing with other rates like CETES or other instrument for in the market of capitals, it's a good rate. So remember that these all numbers are only projections. We made even the worst case, and in the worst case, we have even the positive cash flows, and in a short time of period, you will get back your investment. So well, even in the worst case, it's still a good project. And well, hope you enjoy it. And well, thank you. Richie, you want to
Yes.
add?
About my conclusion is the principal objectives we say in the first one is to help the people to reduce calories of Mexico is the principal problem. About talking about the numbers of inversions is a good idea to inversion of this company because you can see talking about the 6 years the companies has good numbers, so the investors have to take decisions about your put your capital, about large future. And so my partner say it's only a projection, but we have a low risk, so it's a good opportunity to put you some capital of this company.
Well, nice, Richie. Thank you very much for your attention. Have a good
Thank
day.
you.
Bye.
Bye.